What's going on, guys? JPA Trades here. We're going to be going over the Google calls we took last week and kind of the thought process behind them. But before we get into it, how about you hit that subscribe button and feel free to join the channel, get a cool little astronaut head by your name if you want. But let's get into it. So on Friday, we were kind of selling off on some Jamie Dimon bond market news thing. I kind of posted that I thought it was a little bit of nonsense and also showed you guys some put sellers happening at the same time. So everyone kind of it looked like the market was telling us that this was kind of a bogus headline, in my opinion. And I bought calls. So obviously, I did think it was a bogus headline and was able to take advantage of that. So ended up buying those calls about 1 o'clock for 98 cents. So just kind of getting zoom in on what happened here. It goes, wow, that turned out to be almost the exact bottom. Why did you buy them there? How did this work out so good? And we're just going to go through that process. So bottom there, I had that nice ramp up to the close. Kind of mentioned to you guys that thought there would be an end of day rally. So I think I went down here, annoying everyone, putting some memes. So kind of said here, ideally they just buy up the close at the end of the month. So last day of the month, most of the time they're adding to the 401ks, just end of month buying type deals. So it's kind of initial thought process. Also said before more puts getting bought by Jamie Dimon when he was talking. I think even before we bought these Google calls, I mentioned that yeah, they're selling Tesla puts into Jamie Dimon's fear mongering. There was tilt calls getting sold. So there's just some kind of weird stuff going on. So I wanted to find a stock that hey, they've been putting a lot of money in this one lately. It's not really tapped out, juiced out from getting pumped up. Like I kind of mentioned, Nvidia feels like they kind of get it near 150, 140, 145 in that 140, 150 range. It just runs out of juice. So I posted these kind of earlier in April and also May 22nd, just some really big Google calls that came up. So first one we're going to look at here is these leaps for 2027. Someone just throwing down $10 million at the money leaps. Always a good sign that they want to see the stock go higher and kind of have a protection built in where these guys bought at 156, which again, 156 is still pretty far away, but $10 million is a lot of dollars, and this is just black box stocks, so AA above ask. So code here if you want to look yourself, but for what we're doing here, just above ask. So aggressive buyer, really want to see higher. And same thing here in May 22nd. Another big buyer came out 174-ish. So 225 calls for this one for 2026. A lot more aggressive on the timeline and the strike price. So kind of eyebrow raised at what exactly is going on here with Google. Do they think something's going to happen? I don't have it pulled up, but I've also posted for you guys that I saw a lot of quantum stocks and kind of AI stocks getting bought up. Microsoft's almost back to all-time highs. So Google still has a long way to go. We were 200 plus in Google back in February, so there's still quite a lot of upside it can go. So I know just because things pull back doesn't mean it goes up, but same way that Tesla kind of starts moving, Google can also kind of start moving. So why exactly did I pick the 167 and a half to buy? I think low a day, yeah, 167.45. I just like to do dollars, 50 cents, quarters type deal. I don't really like to get into the nitty gritty all the times of the 0.23s or 0.33 or whatever it happens to be. I kind of just set alerts so I can watch like every dollar, half dollar type deal just to see when things are going on. But you know me, I like to post wicks and kind of just interesting highs and lows of the days. So we're on the daily chart here. So looking at high and low of the days of all the different things that happen and kind of seeing where is there some concentration at, where is there a really interesting spot that it goes up and down or something that doesn't look the same. So just kind of going back to the 23rd, we saw that it hit a low day, 167.89, and started going back up. And then also just kind of going to these other wicks that happened in very recent time, kind of after these huge candles started going up. We had 166.63 and another high here, 167. So kind of really getting pretty packly tight in there. So why did we pick where we picked as opposed to anywhere else? The same thing with the red candle down. So big sell off down. Always like to see the huge candles. So there's quite a lot of activity here, guys, from 166 to 168. So why did we pick where we picked? So I don't know if recently you've seen me when I post on Twitter. I like to do just these kind of big patterns. And I think you guys also know that I'm not shy to watch my position go down a little bit. So let's clear these out. Yep. And see, okay, here's where he ended up buying. He wanted somewhere between this last sell off and kind of how big we spiked up. We had a huge daily candle here on this spike up. I love seeing just those big daily ranges where they're like, all right, the stock moved enough today. Let's trim it down. All right, the stock didn't move enough today. Let's sell off. So like here, like if we wanted to buy puts, like here's just for next time. I'm really going to be watching, excuse me, that 176.77 level. So I'll be watching 176.5. So if it gets near 176.5, I'm probably going to take profits. But I ended up getting a little bit lucky here because basically I was willing to watch it in this range. And honestly, I might even kind of went down all the way to 166.5. So let's just kind of pack it in here. So here's kind of the allowable range I wanted. But you see, we went from 172. We had a huge candle down all the way to 167.5 in a day. So I was willing to start at this 167.87. But same thing. I'm just targeting those halves, $1, because I know, like we said, I'll punch a ball in here again for you guys. There's all these previous resistances can turn into support. So I knew, like, hey, I got a lot of downside protection here for me. So like, let's zoom it out. So here's how punched in it is. So if I snag the 167.5, which is where I bought, but I was confident, like, hey, I'm probably going to catch a bounce at 167. I'm probably going to catch a bounce at 166.5. I'm probably going to catch a bounce at 160. There's all those repeat hits where it's like, hey, they're good to take profits there. They're going to be good to bounce it there. So a lot of these wicks can just flip right back. And same thing here, guys. Like it just keeps getting punched in. There was so much support in there that, hey, I felt confident enough to say it's time to start a position now. If it goes all the way down, I'll deal with the consequences. But see how kind of punched in these dotted lines get? You're having all that, and you can do daily lows. So just because there's a wick up, so like obvious buy would have been the 166.5 because you have all this strength coming from these past levels to pick you back up there and look for the bounce, which we got that really nice bounce. Literally, let's go back to like the 10-minute just to show you what happened. So there's that nice bounce and then spike back up throughout the day because going back to the daily, there's not really a lot of repeat zones. Like it can go up really fast. So basically, you got here, what's that, 168.5, but only one. Go to the next high here. And you kind of notice like once we went through 172, we really started flying because it just kind of moved so quick. And I'm sure I'm making this look really ugly for you, but just trying to show you like almost a heat map here of where all your support and resistances are. So you see this really punched in section down here. We knew like, hey, things can get scary at 166 underneath, but as long as that 166 holds, it's looking pretty good. And same thing. We can make these big jumps all at a time. So we go from 160 hit 8.5 all the way up to 169.3. Hey, we get through 169.3, we can fly to 170.65. And that's exactly what we saw on Friday. Little baby up there. We kind of saw these sells happening quick. So I saw a quick bounce 15%. Hey, we're up 25%. Hey, we're up 50%. Hey, we're up 75%. Hey, we're up 100%. And all this is happening 15, 20 minutes apart for each trim because it's just blowing through those levels and flying right up. So kind of to summarize the video quick, map out where all your daily highs and lows are. It can kind of start to look like a little bit of abstract art. So I like to use the dotted line so it gets more punched in. You see those punched in support zones. Hey, here's kind of where I want to be buying. You see those looser resistances up there. Hey, if it's really punched in, probably going to be kind of hard to get through. So maybe buy puts on the reverse if we get through there. Hey, resistance flips to support, support flips to resistance. It's just a cycle. And use it to buy your puts. And same thing with the interesting spikes up. like see if this 167 kind of ever goes across anywhere, and you see like here's some more highs. We'll just punch in here for, I know we got one contract left. We just kind of draw in and say, hey, at 175, things look like they might be getting a little tough. We probably want to take some profits here. So same thing. You're gonna run into a lot of problems. 174, 175. Maybe buy puts there if the market looks like it's been running too hot. But definitely if we're still in calls, I want to be booking profits right in this zone. So hopefully this kind of helped for you guys. If it didn't help, leave a comment down below. I'll try to be a little more descriptive next time. But this is kind of just, the organized chaos in my mind. So hopefully you guys enjoyed the video. Looking forward to seeing you all next week.